As soon as a child is born in Germany, their parents are entitled to what's called Kindergeld or child benefit. Currently, the child benefit is 250 euros per month per child. Some parents use this money for daily needs, while others save it for the child's future. But what if you could do more? What if you could invest that money and protect it from inflation? Yes, you can invest for your child in Germany. In this video, I will share how to invest for your child in Germany, options for a child investment account, how to open an investment account for your child, and what documents would you need. By the way, if you're new to the channel, my name is Esan. I'm a researcher, and on this channel we discuss how to succeed financially in Germany. Let's start with a big question. Why invest for your child in Germany and not just use a savings account? Between 2009 and the mid of 2022, interest rates were hovering between 0 and 1%. So in that time period, it made very little sense to keep money in a savings account. But since July 2022, interest rates have steadily started moving up and got up to a highest of 4%, with the current average hovering between 3.3 to 3.5%. And the trend seems to be heading down, but no one can tell for sure. Comparing the interest rates with the return from the S&P 500 during the same period, the stock market gave a return on investment of 500% or 13.66% per year between 2009 and 2022. And from 2022 till 2024, the return on investment is 25% or 9.69% per year. Now, obviously, the stock market is way riskier compared to a fixed interest rate, but given a long enough investment time horizon, the stock market always gives a positive return. And considering you start early, you have at least 18 years for your child's money to stay and grow in the market. Let me share some calculations with you. Let's say you decide to invest the 250 euros each month in a broad market ETF with an inflation adjusted return of 7%. So here the monthly contribution would be 250 euros and the length of time in years being 18 years. The estimated return is 7% compounding annually. By the end of 18 years, your child will have an investment account worth 101,997 euros instead of 54,000 euros if you just kept the money in a current account. Let's assume the current interest rate stays the same at 3% for the next 18 years. You would have 70,243 euros. This is still better than a current account, but almost 32,000 less compared to the stock market. Now, if you decide to invest in the stock market, the next question becomes, how do you do that? Well, for that, you would need a securities account. Investment account options for children in Germany. A good investment account has three characteristics. The deposit is free of charge, the fees for buying and selling securities are low, and good ETFs are tradable. There's a decent choice available, but these four stand out. 3 direct banks, Consorsbank, Comdirect, and 1822 Direct, as well as the broker Flatex also offers investment accounts for children with equally good conditions. I think that these are good companies and the account should continue to offer good conditions even when your child comes of age. You can open an investment account for your child at all 3 banks without being a customer yourself. At Consorsbank, 1822 Direct, and Flatex, account management is unconditionally free. The Comdirect account costs 1.95 euro per month from the 4th year onwards. Anyone who has an active savings plan or trade securities twice a quarter does not have to pay any account fees there either. The order fees are low for all of the 4 providers. However, there are differences when it comes to saving plans cost. A savings plan is basically just a regular automatic purchase order. The benefit is that once you set it up, it keeps running by itself and costs less in fees than making an individual small purchase. At Flatex, you don't pay any purchase fees for ETF savings plans. At Comdirect, Consorsbank, and 1822 Direct, you have to pay a small execution fee. The fee structure changes from time to time, but most of the banks are headed towards a free model for selected ETFs. For example, Consorsbank is offering 18 ETFs without any execution fee till the end of 2030. If you already have an account with one of the providers, it would be easier to open an account for your child at the same institute as compared to opening an account elsewhere. How to open an investment account for your child in Germany? Once you have decided on a provider, all you have to do is open and set up the account. So how do you do that? Well, you can only open an investment account for children whom you're the legal representative, so your own children or adopted children, etc. Grandparents are generally not allowed to open a securities account for their grandchildren. What documents are needed? The documents you need depend on your relationship with the other partner. If you're not married, you need to prove you have custody. If you're married, Comdirect requires your marriage certificate. The required documents also depend on whether you're already a customer of the bank. If not, you'll also need to provide your ID or passport and your tax ID number. You should also have your child's tax ID, usually sent by the Federal Central Tax Office within 3 months of birth, and a copy of their birth certificate. Some banks like Consource Bank require the birth certificate to be officially certified, while others like Comdirect ask you to send it by post. If your child is 16 or older, you'll also need their ID card. FlatTax only requires a simple copy of the birth certificate or an ID card, the child's ID or passport or regular ID. Application process. To open a children's account, you fill out an application on the website of Comdirect, Consource Bank and 1822 Direct, or in a PDF at FlatTax. After filling out the form, you need to sign it and send it along with the required documents by post. All legal guardians must sign. At FlatTax, you also need to complete and send additional forms like private investor declaration and questionnaire to clarify the status of a US person. All of these are found in their forms section. To verify your identity, you and any other legal guardians can use post-ident, where a postal worker checks your ID and signature. Comdirect and Consource Bank also offer video identification, where you show your face and ID over a short video call, making it easier than going to the post office. Before I share how to start investing, let me share what money shouldn't go into the stock market. You should only invest the money in the stock market that you do not need in the long term. You must still be able to cover unexpected expenses. For example, if you need to sell shares to pay for a car repair, it could be frustrating if the stock market prices are low. For such expenses, you should keep some extra money in a savings account. Now, if you're saving in your child's name, the rules are stricter. You cannot touch the money, even if you're short on cash. The money belongs to your child, so make sure you don't need it for yourself. It's a good idea to put money gifts from relatives into your child's account. You don't need to ask for their approval. Keep some of the money in a separate account for things your child will need when they turn 18, like for volunteering or getting a driver's license. This lowers the risk from stock market fluctuation. How to start investing? Before you begin, you need to decide 3 things. Which company you will invest in? Will you invest a fixed amount each month or a larger sum all at once? And how much will that amount be? For beginners, it's often recommended to start with an ETF. An ETF, or an exchange traded fund, is a collection of securities that trades like a stock. For example, the S&P 500 ETF tracks the performance of the top 500 companies in the US. By investing in this ETF, you're essentially investing in all those 500 companies at once. There are thousands of ETFs available, so find one that fits your needs. Here are 3 of my favorites. If you choose a savings plan to invest monthly, you'll need to decide on the amount. Most providers allow investments in ETFs from 25 euros a month, and some even start from 1 euro. A savings plan is convenient because once set up, it runs automatically. The bank will take money from a clearing account linked to your portfolio for investments. This account also receives money when you sell shares. If you're saving for your child through a savings plan, set up a standing order to transfer the savings amount from your main account to the clearing account regularly. Please hit the like button if you're getting value from this video and consider subscribing. What to consider about taxes when saving for your child? If you save money in your child's name, the money legally belongs to them. This can affect how much tax is due. Tax-free allowance in Germany. Capital gains like interest or profits from shares are usually taxed at 25%. But there's a tax-free allowance of 1,000 euro per year for singles and 2,000 euros for married couples. So if you save in your child's name, they also have a 1,000 euro tax-free allowance, meaning that they can earn up to this amount from investments without paying any taxes. To avoid taxes on gains up to this limit, you can submit an exemption order to your bank. This stops the banks from deducting taxes on gains within the allowed limit. When your child's investments grow, they might eventually exceed the tax-free limit. For example, in investing in a stock ETF for 15 or 20 years, you might see a profit that exceeds 1,000 euros, and taxes would be due on that extra amount. However, that's not something to worry about at the start, especially if you're investing a smaller amount. To avoid taxes beyond the 1,000 euro limit, you can apply for a non-assessment certificate from the tax office. This certificate tells the bank that your child doesn't need to pay income tax because their income stays below the yearly tax-free basic allowance. Using the basic allowance. As I just mentioned, if your child's capital gains are expected to exceed the 1,000 euros annually, the non-assessment certificate can also help. It means that your child's income up to the basic allowance of 12,000 euros for 2025 stays tax-free, even if capital gains go beyond the tax-free savings limit. In total, your child could potentially earn up to 12,000 euros from investments in 2025 without paying any taxes, combining the basic allowance, the saver's allowance, and the special expenses allowance. Saving in your child's name can affect things like health insurance and BAföG, the state education support, but not the child benefit. Income limits for public health health insurance. If your child is covered under family health insurance, they can stay covered as long as their income is low. In 2024, the income limit is 530 euros per month or 6,360 euros per year. If your child earns more than this, including from investments, they may need their own insurance. However, they can earn up to 7,360 euros from investments in 2024 and still stay insured, as this includes the 1,000 euros tax-free savers allowance. If your child is on private health insurance, income doesn't matter for their coverage. And the best thing is that your child's income does not affect the child benefit payment. There's no limit on how much they earn, even as an adult. The key factor is whether they are still in education or training. If you save money in your child's name, it belongs to them. You cannot spend it on everyday expenses or personal items. You manage the money until your child turns 18. After which they control it themselves, because as soon as the child comes of age, the parent's power of attorney ends. The child must identify themselves again at the relevant bank. Saving in your own portfolio. If you want to save for your child, you can use your own securities account. The benefits are that you do not need to open a new account, and you can use a cheap online broker. These brokers often don't have special accounts for children, but you can find good options like I have shared here. However, there are some downsides to saving in your own account. First, investment profits add in your taxable income. And if you regularly have capital gains, you might exceed the savings allowance and need to pay taxes. You can open a second portfolio in your own name and transfer it fully to your child when they turn 18. Don't worry too much about the gift tax. Parents can give up to 400,000 euros to their children every 10 years tax-free. In this video, I talk about the top 5 investment apps in Germany, and one of them could be a solution for you. And in this video, I share how to invest your first 100 euros in Germany. So thanks for watching, bleib gesund, and I'll see you in either of these two videos.